Thank you very much. Welcome to the Halftime Report. I'm Scott Wapner. Front and center this hour, the year's final stretch, the fourth quarter getting underway. We will discuss and debate the best strategies for your money with the investment committee. Joining me for the hour today, Joe Terranova, Liz Thomas, and Steve Weiss. We've had a nice turn in the markets. We are green. We do have the first day of the shutdown. ADP's worst print since March of 23. Lisa Cook is staying on the Fed for now. Bitcoin and gold keep rallying, and here's where we begin Q4. We got a 13.5% gain in the S&P 500 year to date. NASDAQ up 17, the Dow up 9, the Russell up 9 as well. Joe Terranova. Actually, you know what? Not Joe Terranova. Liz Thomas. I just felt like switching it up on the fly. Sorry, you were about ready to go.
I feel like I should apologize to you.
You got demoted. All right.
Bat lead off.
Liz,
yes,
what
sir.
should investor mindset be entering this final stretch?
Final stretch of the year, you mean?
Yeah.
So starting the fourth quarter, there's this seasonality. Everybody gets excited. We're going to have a rally into year end. I do think that that is a possibility. I don't know that it's going to start right now and continue unabated. I think that we're at a point after a lot of these all-time highs that the market is due for a pause, and there should be a time of maybe some of the shakeout of these valuations. Many people have been calling for that. Sometimes just the fact of calling for it causes it. But all these warnings that we've gotten about rebalancing at quarter end causing this big move out of equities and into bonds and so on and so forth just never really comes to fruition. So I don't know why we keep worrying about that. The government shutdown, on the other hand, is something that I think markets aren't necessarily going to welcome, but if you look over history, they've actually done pretty well through a lot of the shutdowns. There have been a few here and there that have been bumpy, but on average, returning somewhere between 2 and 3% in the 3 months following a shutdown. So even this isn't necessarily something to be that concerned about.
Bank of America's Flow Show note today, there were record sales of large cap stocks over the last 2 weeks. Sales of single stocks in the last 2 weeks were the third largest of any 2-week period since 2008. It was driven by large caps. Clients sold 9 of 11 sectors led by financials, right? Joe points out a little bit of weakness of late. You had the 6th straight week of outflows, the 4th largest weekly outflow since 2008 in financials. Comm services saw the 2nd week of outflows, the 6th largest on record. And sales of energy stocks were the largest since early 22. What do you make of that?
Well, look, I mean, I think you could see it in the charts of some of the companies where they had an amazing run, they peaked, and now people are saying, you know what, we missed a peak before on these names, so maybe we're not going to see a third peak, so let's take some profits. So I think that's pretty normal. I don't really know what the correlation is between the Flow Show numbers and actual market performance. My suspicion is it's actually correlation is higher short term, but I'm going to look at the long term. So I still think that, you know, fortress balance sheets, impregnable business models, they're the ones I still want to own permanent compounders. What I am concerned about, and be getting more concerned about it, is that everybody seems to be on the same side of the boat. And when they're on the same side of the boat, that boat wobbles. Sometimes it goes over.
I guess because yesterday I said the same thing on Closing Bell. We had gotten like 40 minutes through the program, and through the 3 panelists at the top and 1 towards the bottom of the program, everybody, no matter what their discipline was like, market's kind of hard to get in front of here. It's set up pretty well into the end of the year. You had Goldman raising their forecast for global equities the other day, right? But sometimes the crowd's right.
No, I agree, and that's why I'm staying long.
You need to get a bigger boat.
Yeah, we exactly, and a more stable boat, maybe a tri-hull, because to balance it. But that is my concern. My other concern is that as we're going into the quarterly earnings, which will hit in earnest in about 2 weeks, we're going to really hear for the first time the impact of tariffs. And somebody's got to absorb them. We're hearing news that comes out saying, hey, you know, Nike, big on tariffs, you know, huge hit to them. So who's going to pay that? So, and if consumers pay it, and well, the other point is that
Nike's up, by the way, almost 6%. So they can have whatever impact they want.
It's from such a low base. Look at the stocks. Stocks are
sure, but it's still up 6%. And many companies, we've long stated that one of the greatest things about this country and these equity markets is we have the best companies in the world, and we have the best CEOs in the world.
True.
And they figure it out. They figure out how to run their businesses through thick and thin.
Right.
Maybe they pass on a little here. Maybe they absorb a little there. Maybe they tell their distributor, you know what, you're going to have to eat some. They tell their importer, you're going to have to eat a little bit too. And then when you add the pie up, it's not so disruptive to how the whole thing looks and tastes.
And I agree with that completely, but I think it depends upon what your company's end market is. So there are two levels of consumers here, and the gap's widening. And that's not a social comment or anything. It's just factual. So we've got a number where we hear that they're living right now. They've always lived paycheck to paycheck. That's about 60% of consumers. But now it's getting tougher for them because of inflation, because of increases in grocery costs.
I got something for you coming up on that, too. Go ahead.
So that is the issue. So if you're playing to them, you know, I think you could be in for some rough sledding.
Okay. So on that note, maybe all of you have seen these consumer finance names. They're in focus because many of them have not performed well. Sort of on the lines of what Weiss is talking about. And he's not the only one talking about it either. The question is it the start of something to be more concerned about? Joe, Capital One's down 5% this week. Affirm is down 15% in a month. Klarna is down 9% this week. Upstart's down 18% in a month. The FT has an article today about subprime auto delinquencies up 9.3% in August. CarMax talked about elevated loan losses in some areas of their loans. That stock is down 27% in a month. BTIG looks at all this today, especially the consumer finance picture, and they ask smoke or fire? Smoke or fire? And what it says potentially about where the consumer is and whether the market is simply too complacent because it's drunk on the idea of good earnings, Fed cuts, and AI overload.
So you mentioned before, maybe we need a bigger boat. Maybe we're ultimately going to just have another boat. And the challenge when I say maybe we're going to have another boat is the boat that we're going to leave is the boat that you're talking about. The names that are levered to that strong economy in an environment where the economy is clearly decelerating. In the new boat, you could put your Mag 7 names, you could put some of the healthcare names, some of the quality names, but the consumer-oriented finance names are reliant on the strength of the economy. And the economy is clearly right now deteriorating. Keep in mind the government shutdown. While everyone would like to say the market's going to overlook it, okay, a protracted government shutdown probably means the unemployment rate with 600,000 government workers approaches 4.7%. That's a problem. Look at the airlines and the way the airlines are trading the last several days. They're trading understanding that leisure travel is going to be more challenged in an environment where the economy is contracting further.
Look at restaurants over, not necessarily a week period, but restaurant stocks haven't traded that well.
There's a clear signal.
Quick service restaurants haven't traded all that well. My question is the market ignoring some alarm bells that are going off in the distance? They're not close enough yet for you to get too concerned about it. You had some bankruptcies. The credit markets are sort of awake, and people in credit are looking at that and saying, okay, I'm going to keep my eye on that. It's not, DEFCON 3, 2, or 1 yet, but we need to watch it.
I think the market is clearly understanding exactly what you're saying. Pull up a chart of Royal Caribbean. As I speak, you could see that stock is beginning to have a modest correction. I mentioned the airlines. You're seeing the strong correction there as well. So no,
but the overall market is not.
But the overall market is going to be somewhat impervious to that because you have a company that has a $4.5 trillion market cap in NVIDIA that's not reliant on the economy. You have other Mag 7 names like Apple, which appears to me like it wants to break out above last December's high. You have strength in the entirety of those Mag 7 names. So no, the market can be impervious to an environment. It goes back to the expression, sometimes the economy is not the stock market. Sometimes the stock market's not the economy.
I got another thing for you. Liz, which Deutsche Bank talks about today. For better or worse, NVIDIA continues to be a major market mover. I don't think anybody would be surprised by that comment, but how about this? NVIDIA's market cap, right, above $4.5 trillion yesterday, first company to ever hit that level. The market cap is now larger than every country's entire listed stock exchange, apart from the U.S., China, Japan, and India. Larger than every country's entire exchange except U.S., China, Japan, and India. Now, if you're on the right side of this market, if you're in those stocks, Liz, you're perfectly happy and you're feeling pretty good. Under the surface, things don't look that good.
Under the surface of tech companies?
Well, no, of other names.
So let's make a distinction between sentiment from investors, which is positive right now, and investors in NVIDIA, in the Mag 7, and a lot of these names that have led the market higher. Sentiment will stay positive. And then there's sentiment of the consumers. And if you look at even just consumer sentiment measures, they have been under pressure this year. And you've got consumers on different ends of the spectrum. We're talking about consumer finance companies. You also have to distinguish between the quality of those borrowers. If we're worried about credit quality of those borrowers, there is a wide spectrum of borrowers in a lot of those companies. And it's going to matter. Their spending is going to matter. Their delinquencies are going to matter, based on the quality that they're coming in with. With a labor market that remains relatively strong, save for perhaps some of the effects of a government shutdown, with a labor market that remains relatively strong, I think the consumer is in fine shape. There are always bankruptcies happening under the surface. There are always delinquencies that are sort of moving around under the surface. There is nothing out there yet that is screaming alarm bells. And to the point about the market not necessarily sniffing it out yet, you have to watch credit spreads. Credit spreads have not budged. In fact, they've gotten tighter over this entire period. Nothing in the market yet is telling us there's a problem here. And the last point I'll make is maybe some of the consumer finance companies are under pressure, but then how do you square that with the fact that private equity companies are under pressure as well? That's a completely different buyer, and that would be maybe a wealthier buyer. So they're both under pressure. I think that we're just at a point in the market where people are looking for opportunities that aren't the things that have led us to this point. So
by the way,
the rotation is underway, and I think will continue.
We got Mark Lasry on Closing Bell today, so we're going to talk to him about what's happening in credit. Whether there's reason to be concerned about some of the recent stories that have made people a little nervous in certain areas of the market. We can talk about lending standards and things that happened when money was accessible. Weiss, part of the point of bringing up the Deutsche Bank note about NVIDIA is that you better hope that NVIDIA and these other names keep performing the way that investors think they will,
right,
or you have a problem. As you look ahead into Q4, that's the ball game. If you have concerns about the economy, are you really going to get a big broadening area outside of large cap financials, very large cap industrials, and then these AI names?
I think you need to see the AI names hold their pole position in order. They don't have to go up, but you can see fundamental flaws in terms of their operating model, meaning disappointment and significant disappointment with them. And it just can't be one of them. It's got to be multiple. If you recall, when Alphabet disappointed about a year ago, it was only them. The others continued to march upward. But they're still going, I still think they're going to do quite well because of their spending on AI and because of the revenue. Meta comes out with a new meaningful product, it seems like every week. So they're leading the charge here. Alphabet has a great recovery. You can see now they're innovating. They always innovated. Now they're really advertising.
They just saw the biggest quarterly gain in 20 years. Did Alphabet up 38% in the quarter. Now,
after lagging significantly.
Had a significant clearing event.
No doubt, but the day of the Eddie Q sell-off, which we sort of put as the line in the sand, right? He's in the courtroom. He says, first time ever, we've seen the share of search decline on an iOS. You're like, oh man, this is a problem. The stock performance from there, I think it surprised a lot of people. And that was probably a tremendous overreaction in the market that day. Maybe we overreacted about it that day. Farmer Jim sat over there and said, you guys are ridiculous. He stayed with it. The stock's up 38% in the quarter.
I'm not entirely surprised it's moved because I own it. I'm surprised it's moved this much. But go ahead, Joe.
No, I think, and I was one that overreacted on that day, pushing up against Jim. I was clearly wrong. I believe the stock on that day fell to about 147, 148 early May. So it's been a dramatic rise. But I do think you had, and leading up, earnings were okay. earnings reported, and the price action was somewhere around 190. But the stock really took off after you got that regulatory clearing moment. And I think from there, you've seen a massive repositioning where if you looked at the Mag 7, Alphabet was the one name where I think it was under-owned along with Apple. I think you're seeing a dramatic rebuilding of position here in the month of September.
Well, it was the only battleground stock in the Mag 7, really, aside from Apple, which is always a battleground because of valuation.
I thought Tony Pasquarello of Goldman, as usual, makes an interesting observation in his recent commentary. Quote, he's talking about the NASDAQ. Price action on the long side suggested a lot is in the price. Talking about the NASDAQ, the biggest stocks in the market, raising plenty of debate on the viability of a fourth quarter seasonal rally. That will be hotly debated. Like, what is already in? The market susses out what's happening, right? The outlooks are so good that stocks have already priced, you would think, a lot of that in. So he raises that issue. Then how about this? The questions over a bubble in AI are going to persist no matter what. Since ChatGPT's launch at the end of 2022, the Mag 7 has soared from 7.1 trillion to 18.6 trillion in value. The 7 names now represent 33% of the S&P, right? From 7 trillion to 18 trillion in value, right?
Yep. It's crazy
for good reason.
Yeah.
You can see why, but should that raise any sort of flag to people in any way?
There are lots of warts in the market that aren't flags yet. For example, NVIDIA is essentially buying their business, right? Investing $100 billion or whatever they're going to do, $100 million into OpenAI.
Like the circular nature of
exactly.
So, right, people have raised
Oracle
that issue too.
Doing the same thing. So you're buying business in a market that weren't so inflated with optimism. Those would start to resonate a little more, as would, to your point, the 2 bankruptcies in private credit. Now, I've no doubt, know Mark Lazary well, as you do. He's a great underwriter. He's a great risk manager, so I'm not worried about him. But there are so many tertiary and secondary, players that have come along, just building books of business for the fees. So the 2 bankruptcies, one was not small, an auto parts manufacturer, $10 billion. Of private lending money they have there. The other one was a subprime lender in autos. So what they've done is they filled this gap that was vacated by the banks under duress, right, by the government, and you can't believe that they have the same risk management that the banks had, and look at the trouble they got into. So those are the things. Right now, we're still in what I think is really a euphoric stage as it applies to Mag 7. We're seeing the others catch up. I worry about it every day, but I haven't done anything.
Look at the power names. GE Vernova, for example, is up 82% year to date. It has a 60 times PE.
Crazy.
And it got downgraded today at RBC. They say, yeah, strong demand, we totally get it. It's already reflected in that valuation. So what more do you want? So they downgraded today to sector perform. Vertiv, record high today. That's Joe's 35 times it trades. It's up 33% year to date. Oklo, nuclear power player, up 421% year to date. They say they're hoping, at least there was a report today, they're hoping to launch at least one of their 3 planned U.S. nuclear reactors by mid-26. Constellation's up almost 50% year to date. How about this space?
Constellation up again today. Vistra up again today. I think that this is a well-known tailwind for the market. You have several thematic tailwinds that investors have congregated around for the course of 2025. And that's unknown. And the fundamentals there really are not going to change very much. I always say this, portfolios are like fingerprints. They're unique to the individual. So you have to say to yourself, okay, if I need to reshape my risk, and I hate when someone comes on and say, oh, we eliminate risk or we mitigate risk. That's nonsense. No one can do that. If you need to reshape risk, you ask yourself the question, where is the liquidity in the market if the market needs liquidity? And that exactly would be Mag 7. That would be the names that you're citing. So if you have an understanding of that, then you therefore know how to size your position accordingly and say to yourself, if I look forward into 2026, despite really strong fundamentals, guess what? If the market needs liquidity, it's coming from the Mag 7, it's coming from your Vistras, it's coming from your Constellation Energy. Just be aware of that. Set your expectation. Doesn't mean get out.
That's not the only place it's going to come from. It's going to come broadly. Because as you correctly are pointing out, the AI trade is more than just the Mag 7. It's, as you're pointing out, it is the energy plays.
Like, what do energy...
You'll sell what you have when you panic.
What do energy-related names and, like, utilities, do they typically trade at such a premium to a market multiple?
Never.
No,
ever.
but what's... I'm sorry.
That's my point. It's a rhetorical question in some respects. When you see that, you know, some of these names that are Vertiv at 35 times, Vistra at 25, Constellation at 32, and Vernova at 61 times, that's why we are suggesting, well, these are being treated as the new growth stocks in the market.
There's a premium that's being paid, and a lot of what's going on right now in portfolios, if you look, Liz, energy is what, somewhere around 3% S&P? Utilities somewhere around 3%. Yeah. So what's happening right now is you have managers who are saying, okay, in a portfolio, Scott, I don't need oil because the Trump administration is saying we're gonna keep our foot on the price of oil, right? I'm going to replace my E&P exposure with utility exposure because of the growth that is evidenced right there. And that's a lot of what's happening right now in the financial services industry. You see the redeploying of capital.
All right, we're going to take a break. Welcome back. CNBC releasing its 7th annual Financial Advisor 100 list today, recognizing the best FAs in the country. Joining us now, the president and CEO of this year's top-rated firm, John Mullen of Parsons Capital, here at Post 9. As you see, welcome and congrats.
Thanks, Scott. Good to be here.
You continue. You were 2 last year, so now you're the top dog. What's your strategy?
So our strategy is really to focus on our clients. You know, it may sound sort of simple, but taking the time to get to know them. You know, every person is different, what they come in with, what their needs are, what their concerns are, and make sure that we're tailoring our approach to fit what their needs and desires are.
Okay, so you're based in Providence, Rhode Island.
Yes.
$2 billion under management. You've got about 1,864 accounts under management. Do you have an investing philosophy that you sort of try and follow in the kinds of stocks that you pick?
So we do. It's a little bit broad. We empower all of our portfolio advisors, portfolio managers, to really build a portfolio that they think is appropriate for their clients. But when we look at it, you know, at a very macro level across the firm, we really try and focus on major themes that we think have long-term, multi-year staying power. We look for leaders in those themes. You know, you think about right now AI, IT security, crypto, the deregulatory push that's benefiting a lot of firms, things like that.
All right, so your top holdings in order: Apple, 3M, Microsoft, Berkshire, Amazon, JPM, Alphabet, Oracle, IBM. You have the Vanguard S&P 500 ETF. It's the VOO for those of you who hold that, as well as you're a large cap stock guy. I mean, do you think that is the trend that's going to continue into the remainder of the year, as we have this conversation every day? Where do you want to be positioned? Do you want to just ride the large cap stocks in the market, or do you think you're going to get a broadening down the caps space?
Well, you know, certainly you've seen the Russell 2000 recently wake up and, you know, finally join the new all-time high list. So we'll selectively go down in cap scale, but we are predominantly, in those large cap names. We do think that's the best place to be, especially when you think about some of the uncertainties that are facing markets, facing investors right now. There's that safety with, you know, companies that can self-fund, that can avoid some of the volatility that's likely going to come with the government shutdown, with tariffs, with all the other geopolitical stuff that's happening.
I mean, the market doesn't seem too concerned with anything. It's trying to be fixated on earnings and rate cuts. Is that how you're looking at it as well?
Absolutely. And what's interesting is, you know, going into earnings season here, we're getting ready to announce, analysts are actually upping their for earnings expectations for the largest companies. Typically, we see them cutting as we go in, so there's a low bar for companies to get over. So, that tells us that companies are really feeling good about where they are, and that's getting out into the analysts. And for the Fed, you see them cutting rates. We don't think aggressively, but they're able to do it while inflation's contained, employment's a little soft here, and that's going to be another leg to the stool for markets and stocks to advance off of.
All right, it's good to have you here. Congrats again. Number one, Parsons Capital. That's on the 7th annual CNBC Financial Advisor 100 list, out today. Let's do final trades. Steve Weiss, you're up first.
Yeah, first of all, I don't know which of the two boats Joe's going to put this in, but I'm going to go with Netflix.
He had to go back there, right?
I had to come at you, Joe. Netflix, look, it's down in a tweet by Musk today saying, hey, you should boycott Netflix. You should cancel subscriptions. I think it's a buying opportunity.
All right, stock's down 2%. We'll continue to follow that. Liz Thomas.
Yeah, government's having a little trouble agreeing on where to spend money, but I think they keep spending it on defense. So XAR.
Thank you very much. All right, Captain. What do you got for us? What do you got?
Apple continues to push higher. I am long. I think we're going to make a new all-time high.
In Apple?
Wow.
Okay.
Yes.
All right.
Well, I mean, we're not that far away.
Yeah, we're not that far away.
No, we're not.
We got a mixed market, and I will see you at 3 o'clock on closing bell.
Hey, everybody. Welcome to Blue Cloud Trading. I'm George. It's Wednesday. It's October 1st. New month. And it's 6:09 p.m. The market is closed. In this episode, in this segment of the video, what we're going to do is take a look at the markets. You can see already Dow up 0.09% for the day. The NASDAQ up 0.42%. I mean, all of these indices were down this morning. You can see they dropped under the prior day's closing price, and then they recovered. Why is that? Well, stock futures are a little changed as investors look past the government shutdown. That hasn't been cleared yet. That's still an issue. Stalemate to last at least 3 days, it says here. Leon Cooperman says we've reached the stage of the bull market that Warren Buffett warned about. So some interesting headlines. Stock futures are a little changed Wednesday night after the S&P 500 logged a fresh high, and investors appeared to shrug off concerns tied to the U.S. government shutdown, which just goes to show there's really zero correlation about what's happening in the world and how the market actually responds to all that insanity and craziness. So, but what we can rely on is our technicals. And so in this video, we're going to be taking a look at the S&P 500, the NASDAQ, the Dow, the Russell 2000, the Euro stocks, and from the show, from the halftime report that we just witnessed, okay, there's about 17 stocks and ETFs that we're going to cover. If they are in my Blue Cloud portfolio, those will not be covered, but I'm going to cover 17 of them, so that's quite a few. We'll also take a look at Tesla, Apple, and Meta, as well as these 3 stocks from our members. Let's first evaluate what exactly occurred here. So like I said, all the indices were up. If we look at the heat map, let's take a look at that real quick. You can see which individual stocks within the S&P 500 were up today. Oracle was up 2.76%. Healthcare stocks, majority of them were up. Big day for healthcare, actually. Tesla up 3.31%. Financials, not so good. Look at this. Berkshire was down 0.9. Visa was up, though, 1.89. So was MasterCard. I'm sure. And the semiconductors, some of the, like LRCX, AMAT, KLAC, they were all up today. Basic materials were down. Let's look at the sectors, guys. Let's take a look at the groups here. And so you can see healthcare was popped quite a bit today. And you know what? This week, healthcare has been surprisingly very bullish. You can see for the week. Let me just zoom in case you can't see that. Give me 1 second. Sorry. Okay. There we go. So if you look over here, you can see that healthcare as a sector was up the most. It was up, more than 3 times the technology sector and utilities and consumer cyclical. This is a defensive sector, so it kind of makes sense, to where money would start to, we were trying to figure out where's the money going to go in this environment. Well, healthcare is one place. Technology, utilities, consumer cyclical, they were all up. You can see that financials were down the most, 0.89% today. Communication services down 0.84%. And for the week here, look at healthcare up 4.63%. So that's really bullish. Basic materials, of course, and utilities were also very strong. So was technology, industrials, and real estate up for the week 0.92%. Okay, so, and we might as well look at the 1 month performance, because obviously we just got, we just entered a new month now, and you can see technology still up the most out of all the sectors, up 9.93% for the month. Utilities up 5.64%. Okay, and then consumer defensives were down 2.06%, and so was energy down 0.44%, which is interesting. Those are the two sectors that did not do so well. And yeah, all right, let's get into these indices first. We'll look at these. Let's start off with the S&P 500. Here's a weekly chart, very bullish still, obviously, and here's the daily. Now, real quick, I know there's some of you that are just stumbling upon this channel for the very first time, and you're like wondering what this is all about. This is the Ichimoku indicator, a Japanese indicator that's been around for decades, and it started to become adopted by financial institutions here in the United States in the 80s. All right, and it's just a quick, what Ichimoku stands for in English. Ichimoku stands for at a glance, and so at a glance we can quickly assess what's going on here with the trend, and if price, which is these Japanese candlesticks here, are above these two moving averages, the Tenkan-sen, which is the 9 period, the highs and lows divided by 2 of the last 9 periods, okay, and above the Kijun-sen, that's the 26 period, and the Tenkan-sen is above the Kijun-sen. We want that faster moving average above the slower one. That's bullish right there, so that's good. We've got all those things happening there. We also want to look to see where this white line is. That white line is the Chikou span. Okay, and that's closing price today, projected 26 periods into the past. If that white line is above the candle 26 periods ago, that's bullish. All right, we want that white line above the candle. If you go back in time, you'll see there were times where Chikou span was underpriced. That's bearish. And then finally, we want the Senkou span A, which is the top part of it, this light colored blue line here. That's called the Senkou span A. We want that above the Senkou span B, the purple line. This is derived by taking the midpoint of the two moving averages, the Tenkan-sen and the Kijun-sen. And if you look at the midpoint and you project it 26 periods into the future, that's where you'll find it. And then the purple line is basically plotted by taking the highs and lows of the last 52 candles here, in this case daily candles, dividing that by 2, and that's where you'll find it. You'll also notice that this is unlike most moving averages that basically take the closing price. This looks, these trend lines can actually flatten out because we're looking at the midpoint. We're really getting an average, right? And I think that's a better way to assess. And you can see that when the moving average flattens out like it does here, it becomes actually a much stronger level of support. Here's an example right here for the S&P 500. It came down to it when it was flat and popped. Same thing happened here. Notice over here, it did close under the moving average, but it was not flat, so it wasn't as strong at that point. It did recover nonetheless, but my point is that's something to keep in mind. Now, daily chart looks very bullish on the SPY. Here's the QQQ ETF, also looking very bullish. All right, I'd like to see this get above these highs here, but I mean, it's looking very bullish still. What about the Dow Jones? It was up 0.11% today. It's above the moving averages still, but just kind of moving sideways. No big moves here today. Russell 2000. Okay, we gave it a blue flag today because it did technically close above the 9 period there. That's the closing price, is the top of the body of that candle there. But it was just barely closing above it. So the closing price was 242.49. And the Tenkan-sen was at 242.36, so it wasn't a big break, but it's above. So there's a monthly level here, 244. You can see that prior high there that I think the Russell needs to break above and close above, so that we can get some more movement in the smaller and mid-cap size companies. Here's FEZ, now the Euro stocks. You might remember from yesterday and the day before, what did I say? I said the Euro stocks, folks, is probably a good place to park your money temporarily until all the shenanigans with the the shutdown is resolved. And the reason I say that is because Europe doesn't have that, the drama that we have in this country. So, and guess what? It's benefiting. Look at this, up 1.22%. Yesterday, I mentioned, like it was up the most out of all the indices yesterday as well. And so now my expectation is that the FEZ is probably going to continue moving up. See that 66.26 level? That's actually a monthly level. Let's go back to the monthly charts. Look how far back we have to go in time to find this level. Do you see that candle? All right. So down here, these are the years. Okay. Now we'd have to technically go all the way back to 2007, December 31st of 2007. That, my friends, is when, whoops, hold on, right there. Yep. December 31st, 2007. That's that candle. Let me just circle it so you can see it. It's this little candle right here. Okay. You can barely see it. But it reached that high there and then it just dropped like a rock, as Tom Lee would say, right? So let's hope that doesn't happen again. History does sometimes tend to repeat itself. I mean, we can see what's going on in the world today. 66.26. Now, how far away are we from this level? We're about 5.38% away from that all-time high from 2007. Wow. That's huge. Anyway, I think it's got some potential here for at least a little continued move, at least up to that level. And what I'd want to do is like observe it and see what happens. How does price react? Do we start, getting reversal candles? A reversal candle might be something like this candle, like a shooting star type candle that leads to a drop. We'll see. Anyway, so that's FEZ. So I do like this quite a bit. If you look down below, there's another indicator I use as the directional movement index. And now I've got it at a setting of 9. And you can see that the positive DI 9 is moving up. That is bullish. Negative DI is moving down. That's bullish. And the white line that you see right there, which is the ADX 9, that's also moving up. That represents momentum. So momentum is increasing while price is moving up. I like it. We're not getting the confirmation in the volume down here, but it's steady. Okay, so we're not getting I would have liked to have seen the volume also moving up steadily as price is moving up. But I do love this candle. What this candle here represents is just a continued move up. And if we look at the daily chart on FEZ, this is the daily right now, you can see that it actually gapped up, right? So all this, we broke through this prior high right here. Let me just circle that one. This is a daily level, the 6150. That is from that candle right there. We broke above that August 22nd candle and closed above it literally this week on Monday. Okay, so it had this little pullback in recovery, and now it's off to the races. And the daily chart also looks very bullish. There it is, straight up. Okay, and the volume in the daily chart is in fact increasing. If we zoom in a little bit on the daily, on the volume down below, you will see, at least for the daily chart, that is in fact increasing. So that's confirming that this is going to continue moving up, at least for the time being. All right. Now, let's see. What else should we take a look at, folks? Let me go to the weekly. Hold on one second here. Sorry, I did something here and I messed up the volume thing. Let me fix that first. Okay, got it fixed. All right, now let's take a look at the VIX. The VIX represents market volatility. It actually spiked this morning and entered the Ichimoku cloud. Okay, so it actually gapped up this morning and then dropped right under, finally closing under the Tenkan-sen. That's a good sign. We don't want volatility to be increasing. That does represent fear, and it can lead to a downturn in the market if that starts to spike. And so the fact that it came back to this 16.29 level, that's a positive. All right, let's get into the rest of these stocks now. I did highlight, okay, with a little blue flag here, the strongest out of the bunch. Out of the 17, there's just 4 that pop up here that look bullish on both the weekly and daily time frame in regards to the Ichimoku indicator. So let's start off with IBM. Here's the weekly chart for you. Okay, very bullish still. This is where it might find resistance, 296.16. Okay, that's a weekly level. You can see how it found resistance there 3 weeks in a row. 1, 2, 3. Okay, and let's take a look at the daily chart. So right now it's kind of building what's called a base here. And so it probably will continue moving up based on the momentum here. Let's see. I'm just out of curiosity. We're about, 3.3% away from these prior highs. LRCX. This was not talked about on the show, but I thought I would bring it up because yesterday I talked about it, how it closed just barely above that 133.57 level. And check it out today, up 6.64%. Really bullish. Lam Research took off today. Here's a weekly chart. All-time highs for Lam Research. This is a semiconductor equipment and materials stock in the technology sector. Okay, it's really taking off here. So I like it. VU, which is Vanguard's S&P 500. Okay, this is a great ETF if you're interested in a low cost ETF that basically mirrors the S&P 500, like the SPY, for example. I mean, it's not going to be exactly the same, but it's close. You can see that the SPY, for example, was up 0.34%. The VU was up 0.36%. They have different expense ratios. But, yeah, VU's not a bad one. Here's the weekly chart and here's the daily chart. Okay, very similar to the SPY. All right, there's the daily chart on the SPY. So that's, they brought that up. Okay, let's get into VRT. Vertiv, technology sector, today had a nice pop. It broke through. You have to go back in time here. Let me go to the weekly chart for a moment. You see this high. This is from early 2025. Let's see. That was on January 24th, 2025. And so it dropped after that level there, and then it came right back. Now it's broken through. It broke above that 155.84 level. This is really bullish, folks. Interestingly enough, that last time I had a position in this was back here on January 22nd, and have not had a position in this since. Now it's taken off, and I think this has potential right here. You can see what's going on with the volume. Again, all those things I just mentioned are looking pretty bullish. Here's another stock they talked about, Capital One Financial. This one, you can see on the daily chart, basically has broken down a little bit these last 3 days. It actually more than 3 days, I'd say since September 22nd, where it got under the Tenkan-sen, stayed under since. And now it's just finding some support inside the cloud here. So there's a potential for a bounce, but I certainly wouldn't be adding a position here because this here, now the directional movement is actually looking negative. You can see the negative DI is above the positive DI. That's a negative right there. And the ADX is moving up. So that's not good. So I'd hold off on Capital One. DAL, Delta Airlines, same thing. You can see the negative DI above positive DI, downward trend line. Stay out of that one, folks. It's inside the cloud. You don't want to be adding positions here. Another thing you'll also notice is that the faster moving average has crossed under the slowing. That's also bearish for Delta. DRI, Darden Restaurants, has not been looking good since about, around here, where it got under the Tenkan-sen back on June 25th of 2025. Since then, it's dropped 12.65%. Interestingly enough, you can see how price, once it got under the moving averages here, under the Tenkan-sen, it continued to drop. It came back, tried to retest the cloud and dropped some more. Came back, retested the top of the cloud and dropped. So it's very interesting how price reacts to the Ichimoku cloud. Why? Because there are other people utilizing this same exact indicator. Over here, you can see, for example, how price found support at the bottom of the cloud. Okay, so those moving averages, there's something to them. All right, right now we're also under the 200-day. That's the dotted yellow line right there. DRI is very bearish. Stay out of that one, folks. KKR is the next one we'll talk about. Also under the cloud, stay out of KKR. That was Bryn's final trade back on June. Back here, it made sense. I don't know. I forget if she's bullish on it still or not. I don't know. This is an old note, so let's get rid of that. But right now, it's not looking too bullish. Okay. KLAR. Remember, these don't have blue flags here. KLAR. I mean, here's the opening price back on September 10th when it became public. It's already dropped 28.48%. The cloud hasn't even really formed on the daily chart because there's not enough data, right? Because it's a new stock, new publicly If we go to a shorter time frame, like a 1 hour, though, that's what the 1 hour looks like. It's not pretty. So stay out of that one. KMX, at least until it starts to show some signs of, reversing. We don't see that here. I mean, we've got a spinning top, but that's just not enough. It does need to break through levels, and at a minimum, you'd want to see this thing start getting bullish on a 1 hour chart. I mean, you don't even have that. What you essentially have is a series of lower highs and lower lows, right? So here's a high, there's a lower high, there's another lower high. It's just stair-stepping its way down. How do you know that this is it? Is this going to be the bottom? Maybe, but we don't have any evidence, right? And it's usually a better idea to have an evidence-based approach when you're deciding about entering or exiting a position. Use some logic, use some reason, folks. Okay, I know there's not a lot of that going on in the world these days, but we've got our own little world here in Ichimoku world. Okay, in the trading world. KMX is another stock that I like. CarMax Inc. Did I say I like it? I like just the fact that there's a positive crossover, but I would not be buying the stock because it is under the Ichimoku cloud. All right, it's under the 200-day moving average on the 1 hour time frame. Let's look at the daily. Also on the daily chart, look at this. Okay, here it is in the weekly chart. Not good. Okay, and it's broken down further, so you can see if we go back to over here in 2023, we took out that low as well. No bueno. All right, McDonald's. How about that one? Here's the weekly chart. Inside the cloud, no on McDonald's. There's a daily chart for you. Okay, still looking weak. 3M. I mean, it's above the cloud, but the faster moving average is under the slower one. It's not perfect here. I'd stay out of this one as well. It doesn't make sense to get in here quite yet on the daily and the weekly chart. It's looking more bullish, but 3M is not there yet on the daily. Nike, inside the Ichimoku cloud. It had a big day today, up 6.41%. And remember, they came out with their earnings announcement, and it was a bullish earnings announcement. But this is not a really bullish candle. This is a hammer, or a hanging man, actually. I take that back. It's a hanging man. It's a hammer when it's on the bottom. It's a hanging man when it's at the top of a move. And so this is not a type of candle that I would be adding a position in. And it's inside the cloud. So there's one more reason why you should stay out of it. If you look over here, the cloud has become bearish, right, on the daily chart because of this downward move. The Senko Span A is under Senko Span B. The Chiku Span, the white line, is under price. And as I said before, that's bearish. Okay, OKLO, OKLO, utility sector. This one here is in between the two moving averages. It was looking very bullish, but it showed some weakness when it gapped down here and created this base. Let's look at the weekly chart. You know, it could potentially reverse course and start moving back up, but it's under the moving average here. I'd stay out of this one too. And you can see down below the momentum. See how that momentum was moving up, and then right there it started to drop. Okay, and boom, it's continued to just kind of stay in this level. RCL, Royal Caribbean, is inside the cloud. No on this one. Last time I had a position in this was back here on September 2nd. After that move up, I had added it back on July 10th. Held through this whole experience here. Got out finally up here for just a 5.6% profit. Upstart Holdings Inc. Financial services sector. Under the cloud. No. XAR. Oh, okay. This looks good on the daily chart. Did I forget to put a flag this? Let's take a look at the weekly chart. I did forget. My bad. So it looks good on both the weekly time frame. XAR does. Okay. It looks great on the weekly, as you can see here. It broke through. So this is an ETF. If you don't want to be buying individual stocks that are in this space, and unfortunately, I say unfortunately because we don't want to be spending our money on aerospace and defense necessarily. I mean, I'd rather see taxpayer money going into other things, but we have to, right? It's a necessity in this geopolitical environment right now. You got so much craziness going on, like I said. So Spider Aerospace and Defense ETF XAR is looking pretty good still. It looks like it's got more room to run. It could potentially make another leg just as big as that one right there after this little short pullback. So wouldn't be surprised to see that. All right, let's get into the Mag 7s. Tesla. Okay, Tesla still continuing to move its move up. Here's the weekly chart, looking bullish. You can see that everything looks good here. The directional movement index, the Chiku span. I'm sorry, the cloud turned bullish recently. The Chiku span. The daily chart also looks pretty bullish. It's going to probably find some resistance at 488.54 back here, and that is about 6.2% away. Apple is still in this little triangle that I drew recently, and it's stuck kind of right now. So I'd hold off on Apple, but technically speaking, it is above the moving averages here on the daily. It's above the cloud on the daily. On the weekly chart, everything looks pretty bullish too. But when you're this close to a level of resistance, 260.10, that prior high there, why take a chance here? Why not wait for confirmation that this thing is going to actually break through? Because that is a level of resistance, right? So when price comes to it, if you start seeing it pull back, it could potentially create a double top scenario here. Wouldn't be shocked to see something like that. Tariffs are going to be a real thing for Apple. They're going to get hit hardest out of all the Mag 7 stocks, in my opinion. Here's Meta. Meta's dropped on the weekly chart, down 2.32% today. Here's the weekly chart under the Tengen-sen for 2 weeks now. There was on Friday last week, closing under. And then on the daily chart, all right, it's been dropping since. Here's a perfect example, right? This candle is exactly where Apple is today, right? It's very close to a prior high. Let's go back to Apple on the weekly. Very similar, right? And you've got this reversal candle that's kind of forming here. So here, let's go back to Meta on the daily. And so the daily kind of looks similar to the Apple's weekly chart. It broke through and closed under 721.73. That's bearish. It did create a kind of a bullish, slightly bullish candle with that longer wick at the bottom there. If we go to the 5-minute, you can see a little bit of buying happening here. It reversed course around 10:15 a.m. It moved up just under 1%. That's not anything significant, in my opinion. And even on the 5-minute chart, it's inside the cloud. So, and under the 200-day moving average on the 5-minute. So no on Meta, folks. Okay, it does not have a blue flag. All right, and look at that EDX moving straight up, and more, confirmation here with the volume increasing. That's not good either for Meta. All right, let's get into these stocks now. BBAI, Big Bear AI Holdings Inc. It's in the Information Technology Services. You can see it's pulled back here and bouncing off of the cloud and the Kijun-sen right there on the daily chart. And we've got a future bullish cloud here, and Chiku span is above price, but it's under the Tengen-sen, so that we don't have confirmation here on the daily chart. And this looks like a pretty volatile stock with a beta of 5.57%. From this low here, it actually moved up just from that low right there. From yesterday, it moved up like 9%, 9.07. It was up 7.06% just today. Overall, this is on the daily, at least, it looks like tomorrow will probably be a bullish day for it. But if you look at the weekly chart, we've got some highs here that it probably will. You can see if we draw a trend line, for example, it's probably going to find some resistance around these levels here. How far is that? It's about another 18%. So that's what I'm talking about. It's very volatile. So you could see this stock reaching those levels, almost another 18% move, but expect there to be, it could also just find resistance at this 9 period, the Tengen-sen, and pull back. But technically speaking, I like it. Not big fan of the profit margins here, negative 294.48. EBITDA is negative, and operating cash flow is also negative. But it's like a small dollar amount here. It's only down $27.2 million in operating cash flow. This is a $1.9 billion company. Next earnings are on November 4th. Okay, let's go to the next one. FWONK, Liberty Media Corporation. Now, on the weekly chart, what's going on here. This one has been stalling a little bit. You can see right about this level here, the 105.61 or so, somewhere around there, or 105.78. So, you know, it needs to certainly break through that, in my opinion. Right now, we've got a reversal candle right here, bearish engulfing pattern. Those two candles together make a bearish engulfing pattern. So it's most likely going to pull back at least to the Tengen-sen. And maybe it will bounce off that, but who knows, right? Here's a week. That's the weekly chart that you're looking at. On the daily chart, it's looking pretty bullish. We've got price. We've got the cloud looking bullish. Prices above the 200 rising 200-day moving average. But this level is really important. I think that I personally wouldn't be adding any new positions here until it breaks through that. Okay. And but we do have a series here of you know, that we get that low is higher than the prior one there. And so, yeah, it's obviously in a building what's called an ascending triangle pattern, and that's a bullish pattern. All right, PANW, Palo Alto Networks, Inc. This one here on the daily chart is moving up. Here's the weekly chart. Now, the high there is 210.39. Now, I think one of the members was talking about shorting the stock. Now, I never recommend shorting a stock if price is above the cloud, folks. You're taking a big chance here because I understand this is a resistance level, that 210.39, and yes, it has found resistance there, you know, 3 times, 4 times, all right? But maybe the 5th time is the charm, and it breaks right through it. The fact is that this is a rising 200-day moving average on the weekly chart. Price is still above that cloud, and the cloud is bullish still. Single span A is still above single span B. The Chico span is still above price on the weekly chart. If you look at the daily chart as well, that's also bullish, right? Price, I know the 200-day is kind of flat here because of what's happening, price getting stuck in this little range. But just be, you know, this is not, you know, if anything, it makes more sense if you're gonna short. And I don't recommend people, shorting stocks unless they're very confident with their trading. You typically want to short when price gets under the Ichimoku cloud. You've got a higher level of success when you do that. In general, here's a weekly chart. Okay, this thing has been on a tear for many years now. Palo Alto. If you go back in time, all right. Yeah, I mean it's a very strong stock overall. It's got a positive profit margin. Maybe you look for a stock that doesn't have a positive profit margin, that maybe their sales growth is declining, you know, overpriced, that sort of thing. But right here, this thing could certainly pop. And so I wouldn't want to be caught holding a short here, because remember, when you're shorting a stock, you can have unlimited losses when you're betting against the stock. It can be more than 100%, all right, loss. Whereas when you're going long, the most you could ever lose on one particular trade is 100%, right? Okay, so definitely, you know, learn a little bit more about that stuff. For those of you who are not familiar with shorting stocks, it can be very dangerous, which is typically why I don't really cover it in these videos, because there's a lot of people here that are beginner traders, and I don't want people to, to get hurt in these markets. I want people to benefit from the markets, and the majority of the time, the markets are moving up. Just ask Tom Lee; he'll tell you that. All right, guys. That's it for this video. Thank you for watching. If you guys like what I'm doing here, help support this channel. Let me show you guys how you can do it. Go to the homepage right here, Blue Cloud Trading. Hit the subscribe button. It's free to do that. It takes 5 seconds out of your day. Hit the notification bell so that you know when my videos are popping up. And if you want to go one step further and help even more so that I can keep bringing these videos to you, hit the join button. When you do that, you can become a Blue Cloud supporter, okay? If you do that, or Blue Cloud Trader is the next level up. Now, Blue Cloud supporter, you can request a stock to be analyzed in the show. Blue Cloud Trader, all right, you can have access to the exclusive member-only videos, not basically free here. So if you want access to that, become a Blue Cloud Trader. Blue Cloud Legend, you'll get access to those exclusive member-only videos. Plus, you'll also get access to some of my recorded day trading videos and Also, you'll get a daily trade update posted. Okay, next to the posts, once you become a member, it will pop up. You'll see this tab. It will say membership. You click on that. That's where you'll see my daily trades. And you'll also have access to all these member-only videos, all the older ones too, so you can kind of see how my trading has been. You know, it's been pretty positive this year. It's been very bullish this year, last year, and you can check to see how my trades are going, and maybe get some more insights if you're interested in learning about, you know, being more successful with your trading. All right, guys, thanks for watching. Appreciate all of you. Have a great rest of the evening or morning, wherever you are in the world. And I'll catch you all in the next one.